Thursday, May 30th, market analysis. Stan Ehrlich, good morning. A little late this morning, starting at 10:11 California time. You know I do the indexes first. Spider and E-mini, of course, DIA, Russell, and the QQQs, and NASDAQ, of course. Same thing, as well as the futures markets. And sometimes cyclicality, cycles, sectors, forex, and other markets. And well, whatever. So we have a double top formation that has basically broken out to the downside in the last day or two, with minor exceptions. So far, so good. These markets have bearish engulfing sell signals on the top in the last week and a half. Every one of them. Having a little trouble today, so I'm not showing you anything but the standard red-green body candlestick charts and my formations and support and resistance, et cetera, drawing tool material. I'm expecting a move down to approximately 5,012 on the E-mini, but that is a very critical level, because if it drops below that, the double top formation will start to kick in, and then we have a 45.75 minimum downside objective. But if that area a little above 5,000 does hold, which is a good possibility, in the next month or two, I would expect a heck of a good rally, and maybe a very sharp one. Then don't forget the October lows. Markets typically top out maybe late August, but September, and then down into October and up. There is over a 90% historical track record that this has happened in the last 31 years, I believe. Unbelievable. So that's the story on a longer term basis. The short-term chart here is a little rally at the moment. This is a 1-minute ES June future contract. And it could go up a little bit more. Keep in mind, and I'm going to go back to the other chart, but I can't show you, unfortunately. It's my RSI that is not showing up this morning. I'll get it fixed today. We're close to oversold. In fact, the DIA and YM are oversold and starting to pop back up. And they've been the weakest, the fastest, you'll see in a moment. So the spider is now finally closing, and did close a very small gap that we had, and I talked about it the day it happened on 514 to 515 a couple of weeks ago. And at the top of the spider, we have the outside down day bearish engulfing sell signal. Perfect so far. Today, new low, a new low close likely, and that gap is closed, but I don't think we're getting close to oversold, so I'm not expecting much of a bounce, if any, and maybe another sharp down day. Remember, we're down only approximately 1.5 points, and that's not a lot. If you remind yourself, back in COVID, and of course we don't have the same circumstances, we were down, oh my God, 30, 40, 50 in a day. Maybe it was even more, I forgot exactly, but it's huge relative to what we've been seeing and now getting very used to. So I don't think any kind of a disaster is about to happen, but economic bad news can affect the market in different ways. Here we go with the next chart. Spider, short-term 5-minute, it needs to rally a little bit, but not much, and then down. Qs, daily data, bearish engulfing on top on the 23rd. Most of the reversals were on the 23rd. I believe the DIA was the 20th. And down we go. Another set of new lows. And all we need to do is get a little bit lower, and that would be the low of 4 days ago on this 5-minute chart. Then you're going to hit more sell stops, and it's probably going to accelerate to the downside. Then you're in jeopardy of making new lows for a total of 2 weeks for the QQQ. And that has been the strongest index during the last few weeks and earlier. So here we go. If the QQQ gives sell signals, everything else probably will have done so already. We're going to the NASDAQ daily data chart, bearish engulfing on the 23rd, great on top of the market. New lows today for a few days, but again, of course, like the triple Qs, we are very close to making new lows for 2 weeks, and that would be below the low of 517. Next, The same thing, 5-minute data, bounced off of very accurately the low 4 days ago and is still bouncing, I guess. It looks like it could go up a bit more, but I'm not expecting any major move up. I would right in here is possibility 18,809. Next chart. RTY Russell is not the same thing at all. Keep in mind, the Russell is not acting the same, and it's doing things a little sooner, a little later, a little bigger, whatever, than the other three indexes, meaning the Spider, the DIA, and the Qs. So the Russell have made new lows here for several weeks and topped out earlier on the 15th of May in a major historical resistance area with no reversal per se, but no surprises. So it's overbought and resistance, and now it's coming down pretty good. I think the Russell could get down to something like 1950-ish. And here is the Russell on a 5-minute basis. Made new lows for several days again this morning and has a good bounce in progress momentarily. We got the YM, Dow Jones Futures Contract, and it's been the weakest of all the other indexes I've talked about. And it's the fastest going down, the quickest, and not rallying the best, et cetera, et cetera. It also has a bearish engulfing ER signal on the top of the market on 520. The others were 523 for the most part. As well as, ladies and gentlemen, we have a sell signal on the top on April 1st. We have a buy signal on the bottom day on April 19th. We have a sell signal on top so far on 520. 3 in a row, all significant highs and lows. Love it. Okay, so time for a bounce. We got oversold yesterday and a little bit more today. We're approximately where the markets close, and this is starting to conflict with the other more bearish ideas. But what happens if the DIA does bounce, and maybe even the Russell? It might be able to bring up the other indexes. If it doesn't amount to much, it won't change any opinion. It won't change any technicals that I can come up with. And then everything hits the dust again. Next, we're looking at the same thing, the YM 5-minute chart. It doesn't look particularly bottomish to me. Although, yeah, I can bounce all the way back up to maybe 93,091. 39, did I say 93? That's my dyslexia. 39,091 at best. Next, we've got bonds. Bonds did get oversold. They're in a support area, and now they're bouncing a little bit. Exactly what I talked about yesterday. How much higher? Probably not much more than maybe 16 and a half. 116, 16, 30 seconds. Notes. Oh, the bond market, I'm sorry, 5-minute chart, coming out of the support area. Not doing too bad at all. Where am I going? Yep, that's it, 116, 16-ish. Right in there. Lows off a few days ago, and maybe a squeak higher. 10-year notes. Back in the channel, just like bonds. A little oversold. Rallying high and last right now and right around yesterday's high, but still in the channel. So the top of the channel could easily stop it. It correlates pretty darn nicely with actually this low right here about a couple of weeks ago and slightly higher. I can't justify much of a rally yet. I think maybe a little bit more and it's going to turn down to new lows again. By the way, that commentary in bonds and notes is supporting a potential bounce of modest magnitude in the other indexes as well. And here we go with crude oil. Down sharply. We have a false upside breakout, it looks like. I have been talking about this triple bottom, a low 5.8, a low 5.15, and the lowest low by slightly amount, by very small amounts, on 5.24. So there's 3 lows that are almost the same price in the proximate, what do we got? 3 weeks. So it's kind of an expanding bottom. I don't even know that there's such a thing. You know, of a broadening top, you get a 1 and then 2 and a 3 and a 4 and a 5. It takes off and then like a bat out of hell straight up, but there's no such animal that I'm aware of. There's a broadening top, and it would be the exact bottom of this. What can I say? Back into a little support last few weeks. Short-term intermediate down. Longer term basically down. I got to go back to being at least neutral to maybe new lows here coming up soon. If it closes below 76.06, especially on high volume by a lot, well, then we're probably going to go all the way down to 67-ish. Next, we got the natural gas. Overbought, turned around, coming down. We already broke through yesterday, closed below my first minor support level. Not super great, but it wasn't too bad. There's a low and a high correlating very nicely. And a couple of days ago, the market tried to bounce off of it. But yesterday it got broken, and we're following through to the downside today more. So my next stopping point, and it's a fairly minor one again at 2.477. So I think there's a good chance now that it's going to continue on into the green zone, which is the lowest low for the trend. And you know darn well if we break those lows and continue to trend lower, it could be a whopper of a move longer term. So looking for 2.3 or a bit lower. Natural gas, this is heating oil, and it has totally annihilated the potential head and shoulder bottom. There's a couple of reasons. Yesterday, I talked about this market coming right up to the neckline exactly and stopping and reversing completely, closing around its lows and even lower than the previous day's close. And I think it had an outside down day, bearish engulfing. It wasn't a sell signal because it wasn't overbought, but that's not a good thing to have happen when you're trying to break out of a bottom formation. So guess what? Bye-bye bottom formation. And I'm going to leave the trend line there only because it's now just an old trend line. You can't call it a neckline anymore. We broke into new low ground or double bottomed out, one or the other today, but we haven't stopped going down yet necessarily. We're close to the low of the day, very close. We're bouncing off support, no surprise. We're not oversold. There's just not that much of a move down. And I think it's about to break into new low ground to a modest extent. Nothing super major. But there's still a little bit more support trying to hold the market. If it gets there, 2.349. And if it gets there very quickly, we might get oversold. Next, gold. I've got the double top still working for me. What I don't like about today's activity is this new low that we had a little earlier in the day, and now we're higher than the open and higher on the day, net higher by $4.8. Now, that's not a lot, and I'm not expecting a bullish engulfing today. But if that happens, then we're probably going to run right back up toward the highest highs, and then everything's for grabs. But so far, the double top is just fine. A little bounce is not bad. I just don't want to get above the highs of a couple of days ago, especially on a closing basis. And the lower it gets, the faster it gets, and making new lows is better. Coming down to the breakout point of 2308.40. And if that is broken below on a closing basis in particular, especially high volume and a big down day, then the downside objective would apply, and that's about 2141. Silver. Maybe we got ourselves a little double top here. I think I may have mentioned that yesterday. Today we're down very substantially and well below yesterday's low, and we did get below the low of 2 days ago. But we're not necessarily staying all that weak, relatively weak. I think we started to come down. My first stopping point on the way down is 30.15 next, and that's not that big a deal, but you can see it already made a high there and a retracement low there. So something to watch very closely. The next stopping point's about 29.35, and that's not a very big deal. So I'm actually looking for something a little bit more important. 27.85 looks, especially if it gets there fairly quickly, it'll be oversold at the same time, to be a likely downside objective. Next. Whoa, I didn't mean to do that. Okay. And there we go. Sorry. So we have support not holding. We dived into it today after bouncing off of it a little bit yesterday, but slipping down into it. This bearish engulfing at the top of the market could very well have been the big turning point. It is an Ehrlich reversal, bearish engulfing signal, the high day in platinum. Now, I'd love to see it close, and I think it's going to below 1021 very soon. Today's Thursday, maybe even tomorrow, but I would believe early next week. If that happens, you've killed a support area. Yeah, support from the moment. An old resistance area that had been working fairly well, stopped on the rally, stopped on the rally, stopped on the rally, stopped on the rally. But old support is resistance on the way back up, and old resistance on the way up is new support, which is now support. So let's see if it can close below that 1019, sorry. And I'm on my way down even more. But it's a little foggy down here. There's a lot of trading range in a very broad area. So I'm going to have to say 978, maybe all the way down to approximately 895. Next, copper dropped off very sharply today. You'll notice I've talked about this double top for a couple of weeks now. The market came up in overbought conditions right up against a previous high that is really old. March 8th of 22, I think actually March 7th of 22, the market topped out on a spike top, much like it just did at almost the exact same price. So I'm not surprised. Now, I can't really justify calling this a broad double top. It's too broad. Plus, the downside objective would be double whatever this is, 3 point from 5. It's almost zero, so forget that. But I can say that the likelihood of it dropping down to 4.5 is pretty good. It's already mostly there. The yellow zone is my next and most significant support area at 4.37 down to 4.30. So we'll get there and then see what happens. And I'm going to go to beans, oil meal, corn, and wheat. You know, I got 4 out of 5, the exact low day. But, and that was mostly the data of 419. We now have a double top. We're trying to break out of this minor double top, which isn't that big or super profound. But the problem is it's going to do some damage maybe to my longer term bullish situation technically. If it does work, and I haven't measured it yet, okay, fine, here we go. From about that number right there to the lowest low, and I'll swing it to the right. So, okay, that's the depth of the formation, and I grab the little depth measure, and so I'm going to go all the way down to 1153-ish. Now, that wouldn't kill the fact that I picked the bottom so far, but it certainly wouldn't be very comfortable, that's for sure. I'm thinking that the market has a good chance of bottoming out at about 1404 and then maybe around 1190. But I don't really want this double top to work as far as this objective is concerned. I'm going to leave the depth measuring device in there. This is this broad, big, huge head and shoulder bottom, which I don't believe is going to work. It's just huge, gigantic. It's 2 years in forming. It produces an upside objective of approximately 20 cents higher than 80. Wow. And I don't believe it at the moment. So the neckline is a big dashed yellow line. I've got the shoulders marked on the chart with blue little V mark here. We'll see what happens over time. Today, specifically, we're seeing not a lot of anything. Actually, we came down a little bit lower than yesterday's lows, but we're hanging in there pretty good, near the high of the day, slightly lower than where they opened. Well, it looks like it could start to rally again. For the sake of the formation, that would be pretty good. But remember, I don't trust this thing. Meal, yes, we got the bottom of the market exactly on February 29th. But we have a double top forming, just like I showed you a moment ago on beans, I believe it was. So bearish engulfing, sell signal a couple days ago, working perfectly. It's the second high in a double top formation. Come on. Down sharply yesterday, and today we're actually in the process of breaking out of that double top that I talked about 2 days ago. If we stay here at 364.40, we will be below the lowest low of 365.30 in the last few weeks, and that's the lowest low between the two highs, the breakout price level, and it should predict a move down, and it won't take too long. It's not very far to 394. 340, sorry, 340. And it could be pretty quick. That's $23. Not bad. We're not supposed to close back up above 365.30. The lowest lows below the two highs. 365.10 is the exact number. So call it 365. So if it bounces against 365, that's okay. But closing above it, nah, a little itchy, scratchy. I don't think it's going to be the right thing. Okay, so I wanted to make new lows before the end of the day. The more, the better. Breakout, breakout, breakout today, right now, as of these current prices. Next, corn. Minor new lows, no particular double top involved here, just a resistance area working a little better than I originally expected it might. And whoop, dragged at the wrong spot there. That's about right. It's horizontal. I'll raise it a little bit. That's good. Okay, so minor new lows, minor new low close for around 3 weeks or maybe a hair more. Nope, about 3 weeks. And no damage done to the fact that we did buy the market at February 26th, the bottom of the move. And it could hold at any level here. I'm thinking it's not really going to test these lows, but I can't rule it out. 436 is a possibility. We've got wheat. We bought the bottom. The low day is a bullish engulfing ER buy signal on 311. Love it. We have a bearish engulfing ER sell signal on May 15th. Now, as a result, it didn't end up being a very good bearish trade, only a couple of days down after that and not very big. But oftentimes these signals are in the process of bottoming or topping out and not the exact highest high or lowest low, which you've seen innumerable times. If you're watching my shows over now, it's about a year and a half, I guess. So this, I think, is part of and didn't catch the top of the market, unfortunately. Now, I don't have any other bearish engulfings, but we did have new highs with a bad close a couple of days ago over bought conditions, and we're dropping off fairly sharply. I mentioned the likelihood in the last couple of days. I think we're going to at least come down to 648. I'm not ruling out at all 621. Next, cattle. Bouncing back up today to a resistance area that we broke through yesterday, but really didn't close that much weaker. We're almost unchanged, only down a couple of ticks. Should stop here and turn right back down to new lows in the next few days. Getting a little bit stronger is not bad. The only thing I can say is if it closes above 182.20, you're probably going to take out the high at 184.50. But I don't think that's likely. I think it's going to probably drop off even more. And I've got some levels a little lower. Not real sure about cattle at the moment. Next, we're looking at hogs. We get the top of the market to the exact day with the ER bearish sell signal, April 10th. And it turns out to be the high of a head and shoulder top formations, which is past tense, almost completely past tense. Worked great. I'm sorry, I won't be able to talk about this for much longer because it's going to be over. And I'm still looking for a downside objective of 94.50, but we've already gotten down to 96. Today's low is about 96, and that's a minor new low. But I can't see anything happening here that's super bullish, but a short-term bounce. I mean, look at it. They went down for about a week plus in a row and oversold conditions. And I'm going to skip the New York markets completely. Where's my E-mini? At the moment, the E-mini is currently only down about a point or so on the day. The 5-minute chart seems to be, and this is 1-minute chart, seems to be stalling out in a ballpark price level that it could do so, maybe even a little higher. I could justify a little bounce back up to 52.85, but not much more, and then down. You guys have a great trading day. Thank you very much. Profitable trading to you. Signing off.